Hey everybody, this is Max Farrow from DexFXMarkets.com, and we are inside the process here for TradingView in our Dex Atomic system, and we're going to be talking about the box validational process, which we're going to be using a couple different series today. So in setting up this box validation, you've seen me set up the gain tool where it has this particular look to it. But in this video, I want to show you, because we help you set the gain tool up with that, but I want to show you what this actually is. And then we're going to go over how to use it in the next video on how to use the box validational tool to pick the right statement over on Nadex. But let me give you an explanation of what these tools are and what we're physically doing with this process, okay? First and foremost, we're going to pick a strategy that we're going to use. First over, over under, or first over under, and all in. And remember in the previous videos, the first over under is where the arrow is above the moving average the first time. We're going to be using that signal. Since the price traveled above and then down below, it broke the cycle, and now it's refreshing the cycle by being above it again. This is a proper signal. Same to be true with this signal here. But in the first over under, this would not be, this would not be, and this would not be, because price never closed above the moving average here. Okay, it only went across, didn't close, so it didn't refresh that market. We call this rejection from the mean. Okay, so now we got that under control. So when we use the signal, we're going to be using a certain process on what we call box validation. Now, what is the box itself? Well, we're going to isolate where does the start of the signal come from, and it comes from the open close of the particular bar itself, right? So, but in where the arrow is, it's the open of where the arrow bar is, but previously is the close of this previous bar. But we only want to use the information from this bar. Why? Because this bar hasn't happened yet. If you just get into the signal, this bar hasn't really established itself yet, right? This is within the first 5 minutes of the signal. So we're going to use the previous bar as the beginning time frame, right? And we're going to use the time frame of 4 hours. That's right, we're going to use 4 hours. Now remember, we're using a 5-minute bar here. So we're going to go back a whole bunch of bars here to be able to do this. Now, I've taught you how to set up your little rectangle tool, or you can grab it over here from the left. And you're going to grab your little rectangle tool here in the very beginning. Now I've set mine to be purple, but we're going, you'll see why here in a second, just to kind of give it a feel. All right. Now the box that we're going to be setting up uses 3 variables: time, the price of high, and the price of low. And let's get that set up now. So I'm going to click onto my screen, and I'm going to drag over. If I'm starting here at roughly 9 o'clock, remember it's 5 minutes before 9, so this bar closes at 9 o'clock. So we're going to use from 9 o'clock, and we're going to count in our head back 4 hours. So that would be 5 o'clock. So I'm going to roll all the way back over here to exactly 5 o'clock and use on that bar. Now, I'm just going to let go, because right there, I'm just going to let go and click. You got to click, and you'll see these things in the box called anchor points. And these anchor points are very important. So what we want to establish is we've established our time variable. So over 4 hours, right? From 9 to 5, or 5 to 9. And now we need to establish our high-low. Now, what is that? Well, the high-low within this time frame. So if I grab this middle anchor here at the high, I'm going to bring it down to the highest close point of that time period. And you would think it was here, but it's actually right there. So I'm going to drag it right back to there. And I'm going to grab the lower bar, or the lower anchor, and drag it down to the lowest close or open point of that time frame, which is right here. Okay, so now I've established 3 points of contact: a time of 4 hours, a high, and a low. This box now represents this particular time period of this signal's information. Now, we've always learned things from the past called looking left. We're always using support and resistance from previous pricing. We're using the moving average of price over a period of 50 bars here. But we're also using what we refer to as mean level. Now, in this box, we're using a high, a low, and of course, we're going to be using what we refer to as a mean. Now, the mean means the middle. And where's the best place to look? The middle over the past 4 hours in this box is right here at this middle anchor point, which is conveniently set up at that point. Now, if you know anything about the tool set so far, we know that if we want to make a straight line with our trend tool, we just have to hold shift and boom, there it goes. This yellow line represents the mean. I'm just leaving it there for now because if you were to take away the box itself, you would actually see that that's a pretty good level to begin with, right? Where did that object go now? I completely lost it. All right, if that happens, you can just draw the box again, but that's like that simple right there, like that. So you can kind of see that that's set up exactly. So you can kind of see that in this mean, look how well this sets up. This is sort of a rejection area. This sort of is rejection. You get this little hover here. You get a little bit of railroad tracking here, a little bounce here. So you get to see the objectiveness of the mean within this 4-hour box. And this becomes a very good symbol to use while you're trading. Now, some of the other validational processes is that if this is the high and this is the low, sorry, one second. Then, and this is the mean, then in between the mean and the low, this would be referred to the low quarter mean, right? Or the 2575 level. And then this would be the high quarter mean right around the middle side, right? Now, this box begins to look very similar to another tool that we have used in the past, the gain tool. And watch what I mean here. If I click on the gain tool now, and I drag to this from this lower left here, all the way up to here, I easily see, let me drag it in properly, right about there. Look at that. Now, the gain tool seemed to work out exactly without having me draw all those extra lines in there. So you can easily see that the gain tool does work for this process because it tells you that that's a quarter, you know, 75 is devoid of 25. So that's a quarter level and that's a quarter level and that's the mean. That's the half line, right? Now, what all these means, we'll learn later on the where the arrow is at and all that kind of good stuff. So what I'm going to do is I'm going to go ahead and delete all these extra sections here, just like that, and show you how easy it is to set up once we get into the process here. Now, those levels that you see all have a good representation of that 4-hour block. I'm going to grab my gain tool here, and I'm going to see if you see my crosshair. I can easily see that if I line myself up, I can set the crosshair up on the low down here too. And then we're going to go from the low to the high within that time frame of that 5 or that 4 hours, which is right there. Now I can easily see that this is the high, this is the low, the 50 is the mean. And if I hover over the 50, I'm going to look over to my right and I'm going to see my price that I want to be able to utilize, 0.7271. Now, which ones to grab over on Nadex and all that kind of good stuff, that'll be in the coming videos here on how to use the proper statement price. But what I'm showing you now is how to set up and work with and what the actual gain validational box is or the box validational system is. Now, what we're also looking for when we look at the trades is that we're also looking for where is the position of price when this 4-hour block is and what level it's at. So if the price, okay, if you think of the mean being in the middle is the equator, then this would be a buy hemisphere and this would be a sell hemisphere down here. Okay, lots of jargon to be able to use. So within my box validation, I have the price in the upper quadrant, okay, of the buy hemisphere. So here's price here. So now there's two levels to look at. The first level that you come to is the very first quarter mean right here. So this would be considered what we refer to as the very first level that you come to wherever price is at when the signal fires is referred as to the high risk trade. Now, this is a high risk trade, but there's also an opportunity for it to trade a lot more. The low risk trade, which is set to the mean. Now, this is where I'm going to be telling most of you traders to go to in the very beginning. You're going to set more working orders, but you'll at least be safe and not lose as much. For some of you, you're going to trade a lot more from here, and your trades may get filled faster, and they'll be filled a lot more. But you're also going to lose more. But with a good system of 63 to 64%, depending on the pair, you'll still come out ahead by the end of the week. Now, unfortunately, you're not going to be able to do exactly what everybody else does. So there's going to be times that you may have chosen that you're going to get into trade that you may win less than somebody else who's doing the same exact thing you're doing, but not at the same times. Choosing the levels to make it standard takes all the guesswork out of it. If you use this particular level, it's 72.73, 72.74 at this level. This is a high risk trade, but it's not overly high risk. It's not like I'm going at the monies. Coming to something that's very close to there and hoping for the best. Okay, you will trade at a level at that point, but will it be successful? And we have found the answer is no. Okay, so if you trade to the very first line on the 50 off the price, this is the high risk. The mean, or the second one in, is then considered the low risk. But let me show you what it looks like when the price is set in between the 50 and the 75. Let's see if we can find one. Right here, maybe. Not that one either. Right there, maybe. There we go. Nope, this one's also set up in the quarter mean there. Okay, so if it's set, if the price follows up in the quarter mean, you use this line as the high risk, you use this line as the low risk. But if I'm trying to just find one that's set in that point. There we go. Oh, wait, maybe not. That one's also up there. Yep. So it looks like all these particular trades are set up at that point. But if the price were to fall in between the 50 and the 75, you would use the 50 as the high risk and the 25 as the low risk. I hope that makes sense. So this box validational process, or which lines to be able to utilize, works on all three strategies. Whether or not you're doing first over, under, or the all-in strategy, it still works. Now, with the all-in strategy, we would have to add what we refer to as deviations upon this. And what you would do with that was that you just simply copy the box you're using, paste the box, and give yourself another potential like this called deviational control. And what this means is that you would then use, if you were using all of them, all the signals at that point, you would just expand upon your, if you put another one down here like this, you could actually do another one down here, because during this 4-hour block, you would have a need to know what the price is down below, each one of these being a deviation. Okay, so if you were using, say, these particular prices for a buy, you would have to come down here. You would have to know what these prices were down here as well, what levels you wanted them to be at. So there is a lot of control that you can have for an all-in, but we'll have a whole video set up just for that. I just wanted to get you to see what it looked like for the box validation using the gain system, what the box validation system was, that there's a high, a low, and of course the time variable. Now, once you have all this set up, you'll begin to be able to see the relationships. Once you start seeing the trading videos happen, you'll be able to see the relationships between level. Now, you're also looking for the coincidences as well. Look at this green line for support during this 4-hour period is sitting right in the middle of that gain box. And you'll notice this quite a few times, that the box may be set up for a particular pair, and you're like, wait, there's already a level there. In most cases, you'll go with it. In most cases, you can actually advance some of the levels that you have, and you'll be able to see relationships within the levels, and you'll be able to adjust your pricing to get you better pricing on the network, to get that in between high risk and low risk, we refer to as the medium level, right? Medium risk level. to where you kind of adjust. Maybe you don't go with the 50 or the 25, you go with someplace in between. Okay, the mean of the mean of the mean. I hope that doesn't confuse the hell out of you, but let me tell you, once you see this, you can't unsee it, and you begin to work within that mentality. The people that become very successful in this can see the levels as they're working with them as they go. Some don't even need the boxes anymore. They can kind of see those levels, and they kind of know that, it's not so much coming back a certain amount of bars, but it's knowing what levels are very efficient. And look at this. Even on this particular one, if we were to push this to right there, you'll see that that 0 level that we set up here is here, here, and here. This is not a coincidence. This is how the big traders trade. Okay. All right. I'm Max Farrell. This is Dex FX. I took enough of your time. This was a long video, but at least now you got this box validational process down and start utilizing it in your decision making. Now, in the future videos, I'm going to show you what it is to grab the statements and what statements to grab and how to grab and what coincidences to see in there for these levels and how to utilize that information over on Nadex. I'm Max. This is Dex. We'll see you next time. And as always, trade well.